Welcome back, traders. I want to start off with a disclaimer. I am not a market maker. I'm not a money manager. These videos are created for your educational purposes only. In my previous videos, one of the things that I talked about was teaching you guys some proven strategies that has worked for me. But before we can get into the strategies, we need to learn about candlestick reading or candlestick analysis because it's a big part of learning the strategies. So once you get an idea of how the candlesticks work, it will help you become a successful trader. When looking at the stock charts for day trading, one of the things that we're going to have to considers are candlesticks. In the previous videos, I told you to set your stock charts to candlestick formation because it's an important part of the strategy. Now, also for day trading, I highly recommend the time frame to be on 1 day and the minutes to be on 5 minutes. So you're going to be 1 day, 5 minutes, and you're going to be on candlestick. So we talked about it in the past that a candlestick represents every dollar that was spent on that stock for any given period of time. But each candlestick is made up of different components. Um, the real body is the middle. That's where the bulk or the real portion of the trading. And then you had a high and a low of the day. So if you look at that very thin wiki type part that goes on the top for the high, or the very thin narrow wiki type part that for the low, these are called wicks, and what they represent is a rejection. So ultimately what happens as stock goes down and up, they test certain levels. And if a stock is going up and it tests a higher level, sometimes it get rejected from those higher levels. So that's why you will see this very thin wiki type part on this uh, illustration. We have it labeled as the upper shadow or the lower shadow. So in your mind, you want those two to represent rejections. So if a stock is moving up and then you start seeing a stock get rejected and then you start seeing the body getting lower, what that means is as the stock is going to slow down, probably start flattening out and probably start moving in the opposite direction. And then on the other end, if a stock is going down and you see the lower shadow or the wick, the stock is getting rejected from lower levels. And as the real body gets smaller and keep getting rejected, it's going to kind of flatten out and start moving in the opposite direction. So when a stock opens, it opens at a price. When the stock closes, it closes at a price. Now, if the stock closes at a higher price than it opens, that candlestick will be green. But if the stock closes at a lower price than the stock open, then that candlestick will be red. So green represents a higher level of close from open, and red represents a lower level from close to open. In day trading, you want to get in and out of positions with a gain. And again, I said I'm going to go over some strategies in my upcoming videos, but before we can really get into those strategies, we really have to understand candlesticks, because most of the strategies kind of revolve around turnarounds where a stock is going in a certain direction and then you recognize when the stock starts slowing down and it's going to have a reversal. and start going into the different direction. And a big part of that is being able to read the candlesticks. So bullish candlesticks, I talked about it, stocks that gotta go up are green. They represents the bullish candlesticks. um, Candlesticks that go down are red. They represents bearish candlesticks. So ultimately, um, one group is in control. Either the bulls are in control, or the bears are in control. So also you want to consider the size of the candlestick. If you have a very long green candlestick, that's a very, they call it a bullish engulfing candle. It's very bullish. So it's a good indication that the next candlestick will be green. And then if you have a very long red candlestick, that's a bearish engulfing candle. And more than likely the next candlestick will be red. It will probably continue on. When the stock gets ready to slow down, you like the next candle might be green, but it might not be as big or be as long as the other one. As they start to get smaller and smaller, and they start to have shadows or wicks on them, or they keep rejecting the other price, it's a good indication that the stock is getting ready to turn around and go in the opposite direction. So just knowing and understanding price, they call it price action, and how it works, knowing that if the bulls are in control or the bears are in control is a very important component as it relates to day trading. So just look over these candlesticks, kind of, take your notes, jot them down, put them in your minds, because as I start going over these strategies, and as you start watching stocks on a daily basis, it's going to make more sense to you. But this is kind of just the basis of what you need to know. Green is going up, red is going down. A long candlestick is a bigger move. A smaller candlestick is like a smaller move. So you know about the bullish engulfing candle, the bearish engulfing candle, and this is just kind of the basis of what you need to know about candlesticks to make you a successful trader. I'd like to personally thank you for watching the video. If you could smash the like button, hit the subscribe button if you're not already a subscriber. You share it with your friends. I'm trying to grow the channel, get it out there to people who really just getting started in day trading, and this information can be really helpful for them. And I'll see you again on the next video. Thanks.